Welcome to the Nightly Market Intelligence Report. Tonight is March 17th, 2013, and the time is now 8:12 p.m. Eastern Standard Time. We have a special alert we're sending out to all subscribers and the world tonight. Again, March 17th, 2013, Sunday night, because of a new significant historical spike that has come in on the equity side right here on the Dow, using the Dow as a proxy to determine the current state of the U.S. markets and, moreover, the real probabilities for future directional price movement. Now, what we're looking at here is a smart money trading methodology that was designed by this end here at the inside technician over 17 years ago. First and foremostly, as a trader, as an investor, as a professional, as a beginner, we need to know where we stand every single day in the U.S. markets. Now, this doesn't happen often, this type of significant volume spike. We're going to take a look at the U.S. markets, and we're going to take a hard look at a high probability market turning point in play. Now, what this signifies right here, this volume, and this special report tonight, is that one of two things will happen out of this. This will be the volume that will act as a short-term correction to the downside before a continued move to the upside, or it is flat out an across-the-board sell from the smart money within inside the U.S. markets, and now it will act as the catalyst, the reason why the markets will turn around and have a longer-term calculated sell-off to the downside. Let's take a look at the indicators, and I'll show you exactly what I'm looking at this time. The volume spike that's coming here, the first thing I'm going to take a look at is I want to see the short-term money flow index to determine what is the reality of the smart money behind that volume that has come in. Now, with the last two sessions here, this indicator has turned down after a substantial negative divergence as compared to the inflated highs on the run-up here of prices as compared to the slope of the line on the money flow index. It is clear that after this was officially stamped out, that a very small amount of short-term money came in to act as a blow-off, and now confirming the volume is a sell. The money flow index has traded down on the very last session. Very exciting times we're in here in the U.S. markets. Right now, if we take a look at the next chart that I want you to see, the advanced decline oscillator was creeping up shortly here, but in no way, shape, or form was this type of strength equal to where it was back here when the large bulk of shares that had been advancing versus declining peaked out here. Negative divergence, crossover trend line, yes. But comparatively speaking, we had been talking about this for the past 2 weeks on every single report, that the market has been trading up on weakness because of the lack of volume that has been behind the uptrend here. So when we look back and we analyze everything that we were taking a look at every single night on the report, it's clear to see now that because a significant historical spike has come in, that we have a real setup for a short-term correction or possibilities of a larger, possibly major market sell-off. The MACD has peaked out, which we talked about here, our major trend following indicator, as compared to its recent level here. Now, when the market corrected, and we called this one on the nightly report, we had a trend line violation and a cross. This will take a little bit longer for it to play itself out. But one thing is for sure, that this indicator is at its overbought territory at the upper region of its subgraph, and the smart money has come in. This indicator will be the lagging indicator that will tell us for sure when this trend has officially changed to the downside if prices continue to move in that direction. What we do have shortly that we're going to get into here right after the sectors is the most recent action on the futures, which has gapped down on the new overnight session. And a large part of our decision-making process tonight is the reason why we feel that this can be a short-term correction to the downside before another leg to the up or a major market sell-off in process. So getting away from the Dow and leaving the visual of the significant volume spike that's come in, let's take a look at the levels here. The current support level is 14,397, and the lower support level on the Dow will now be 14,253.77. And before we cut out, 14,092 is the major weekly level that was laid out from 10/19/2007. So let's get rid of this and right into the sectors and talk about what we've done. Every single sector that is within the 10 sectors we're going to analyze right now in our special S&P 1500 database, and the ETF symbols that are traded against these sectors, in this case XLF, every single one we have gotten out of on Friday's close because of the substantial volume that came in to protect ourselves. If this is a sell-off, more than likely, futures continue to trade down tonight. The equities market will open on a gap down for tomorrow, Monday, 3/18/2013's trading. So in order to protect our capital and be sure before we make another decision, we have closed out every single position that was open. We're out this on 3/15 on Friday's close, near Friday's close, with a 5.25 gain in here long and out. Next, on 50 telecommunication services, the ETF symbol XTL traded against this sector right here, out on 3/15 with a 1.25 gain. Next, on 30 consumer staples, and the ETF symbol XLP traded against this sector you're viewing. We were in long here, back on 3/4, out again on Fridays, near close, 3/15, right here, for a 4.5 point gain. There is nothing more important than protecting monetary capital because it protects your emotional capital and gives you the ability to think clearly when we have another high probability trading opportunity here. Again, right here, 35 healthcare and ETF symbol traded against this XLV. We were long 5/18/15, out just before the close for another 14.5 point gain. Here across the board, again, sold out on tonight's 3/15 near market close with an 8-point gain. In here, 387 and out. We have a possibility of a short trade in play here. We had never taken this trade to the upside after we went short and got it here because of the weakness on the large move down, the velocity of this move. So as a matter of fact, on last week's Thursday's report, I talked about this and how this signaled so much weakness. So to protect ourselves, again, we have no trade call yes on this tonight until we have a high probability setup. Taking a look at next here, I want you to see 55 utilities. Now, we talked about this as being defensive in nature. Usually, if the market is going to tank, utilities can be found as a safe haven, defensive in nature. For those of you that are new to trading, okay. So here we are. We're long again utilities tonight, and the ETF symbol traded against this sector, XLU, because Friday's trading was up, clearly signaling higher probabilities. The market will find this as defensive in nature, and we were right to be long here, excuse me. When we talked about this, where the market was overbought, and we really hadn't had anything to lose, this continued to trade up. We were surely at the precise entry to catch the long trade, which has obviously turned out to be the right decision. Right here in at around 213, trading up, closed Friday session 219.69. Let's call it 219.75 and round it up. There you go. Another excellent trade identified by the smart money methodology. Now, we had to do a 180 on this because of the surprise volume on Friday's session. Otherwise, we would have continued to stay long. So we got out because of that volume spike on the Dow, waiting for clarity and brevity to make another decision on 20 industrials and the ETF symbol XLI traded against it. Here, taking a look at 10 energy. We're long in case the market does find this as well as something that will be defensive in nature. But if it's not, we'll be out of this. So again, smart money is long with a close stop if 10 energy and XLE are not found as defensive. There we are. If it is defensive in nature, we have the best entry possible and we'll ride this up. If not, we're out and we'll cut that quick. Next, we have potential short move in play if the market tanks on this. Otherwise, we have no call, and no call tonight, but I'm looking at a higher probability set up to the short side right now. Back to the 40 financials, and that finishes up the 10 sectors. Let's get right into the near month, which has changed on tonight's report. We are now officially analyzing, and the smart money trading methodology is trading within June 2013 near month of the S&P E-mini 500 futures contracts. So let's get right into it. Here we are, 613. What I want you to see clearly here is that equities is the side of the U.S. markets that has made the decision for what we just talked about being a short-term correction before the market trades up again, or the obvious, more obvious call, which will be a longer-term market sell-off to the downside. The support levels that I had laid out on one of the previous reports, on last Thursday's report, as a matter of fact, we're going to go ahead and zoom in here and take a look at these levels right now. And as we can see clearly here, with the futures market gapping down on the most recent overnight session right tonight, hot off the press, that this support level right here at 1538, where the market gap down has already been hit and is now trading at 1537 flat mark to the market. The next level to the downside on a daily candlestick chart basis, end of day basis, is 1532 as outlined by the close of this bar right here. The next level to the downside will be the open of the same bar right here, and that level is 1521.75 for support. So oddly enough, prices gap down and hit almost exactly where we're trading at right now at 1538. So this is how the daily levels broadcasted out into the future can be used as price profit targets to the downside. In this case, if the market keeps trading down, these will be the major levels that we'll be looking at in conjunction with the 15-minute charts to take the trades that we take. Okay, let's get taking a look at the indicators right now, and we'll show you what we're looking at. On the Chaikin oscillator, we have a downturn here after a negative divergence, because we're basically looking at these 2 points right here, and it's clear to see that at this time, as we connect these 2 points, we have a very small, in a small way, sloping trend line to the downside. But if you look at the slope of the prices to the upside, there is a marked difference between the slope of this almost horizontal line as compared to the slope of the prices to the upside, indicating clearly that the prices had been trading up on inflated highs. Now here's the gap again. On an updated real-time chart at 1537.50 right now, demonstrated on a daily candlestick chart. So this is very important to understand as we trade. We're looking for any intelligence that we can get to determine exactly what are the higher probabilities for future directional price movement. This right here, because of the gap down now, has officially given us another negative divergence on the Chaikin money flow side right here, indicating weakness to the downside in the near-term future as well. Taking a look at the EMAs almost crossing here. Taking a look at the MACD almost crossing here because of the gap down. That will probably happen within the next few sessions. If prices continue to trade down, stochastics in overbought territory. And looking at the overall money flow on this end, I would not be surprised if this starts to turn down almost immediately after this run up here. Now, when we talk about real-time trading opportunities, what we want to stick with is real in this case, where the equities will be leading futures if prices continue to trade to the downside, will be a longer-term check and money flow perspective here versus the short-term on the comparison of the futures to the equity side, because we did not have the substantial volume spike on the futures that we did on the equities. So this is a little bit of reversal and analysis, and is very important to use every single day as we make the relative comparison of the futures to the US equities. So in conclusion, now that we've analyzed the Dow and the futures, with the new near-month contract being 613, it appears at this time that the volume that has come in because of the gap down on the futures, and more than likely the gap down that will happen on the equities tomorrow's trading, that we have a short-term correction in play before the market moves up again, or more evidence towards a substantial sell-off to the downside in play because of the smart money volume that has come in. So let's get right into real time and take a look at the 15-minute charts. I want you to see how significant this gap down shows up on the 15-minute charts and what we can expect out of this. Here we are. Now, prices had been trading right here. Let's fly in the data box. Prices had been trading right here, okay? And this was 315. The market closed 1,715 hours. The gap down where prices opened right here on 1815 hours and 317 for today's new overnight session. It's clear that at 1544 right here, we're just about the prices opened up at, and this level down here exactly on a low at 1536.25 is a substantial gap to the downside that it's going to be pretty tough to close because of the strength of the move. Now, what we will have is probably some temporary leveling off between the overnight session, but as it appears right now, this gap may never be closed because of the large amount of volume that came in on equities, futures leading the market to the downside for the equities opening tomorrow. Taking a look at the next indicator I want you to see here, we have Stochastic's Momentum Index completely bottomed out here at a level that is even lower than it was found previously at around this area right here at 535.45 on 315. Next, taking a look at the check and money flow. Because of the sell-off here, we have some longer-term money coming in, but only to stabilize the current prices so we don't have a severe overnight sell-off and give back any more of the daily gain that has come through within the last 9 trading days. Taking a look here at the 1-minute chart right here. Here is the size of the gap. The line represents the session change right here. So this is one of the most largest, without a doubt, is one of the largest gaps that I've seen in my trading history within the futures market. Now, prices have stabilized, as I just talked about, and right now we're trading right around here at 1535.75 to 1536.75, 1538. And this is where prices might stand for some time as they have settled down and found a base formation as outlined by this pattern right here. In conclusion, what we have before us is an opportunity to be able to trade a series of real-time trades to the downside, one after the other, day by day, as the 15-minute charts will give us the true high probability trade setups. Just like we had them on the way up when the market was trading up, we'll have them on the way down. The price profit targets will be set in advance for every single trade. The precision entries will be set long before the trade is made. And we're always looking for a risk to reward ratio of 3 to 1 or greater or from this end, trade is never taken. Now, based on the smart money trading methodology that I designed here over 17 years ago, we're really looking for true high probability trades. And the reason why we're so selective is because we know through history that your greatest positional advantage as a new trader, as an intermediate level trader, or as a seasoned professional is patience, waiting for the trades to come to you. And that is exactly what this methodology is all about. I want everybody to pay special attention to the Nightly Market Intelligence Report newsletter that'll be coming to you, included in tomorrow night's Nightly Market Intelligence Report. This is your guide. It gives you all the numbers on the returns for the S&P 500 mini trades, the most recent market calls from our smart money bias market call side, and a running sum total since inception of exactly where we stand on our trading numbers based on the smart money bias calls on the S&P mini 500 trades versus the S&P 500 equities index on a daily basis. This is Jeff Killian, Chief Market Strategist for the Inside Technician. We have an excellent opportunity in front of us. Special report tonight. Let's pay special attention to this report, and let's go out there and take the true high probability trades. We'll see you again tomorrow on the next Nightly Market Intelligence Report. Good night.